Welcome to the weekly economic and financial commentary, your one-stop shop for all things in markets. I'm Max, your host for the US section.
And I'm Mona, bringing you the international updates. Get ready, because we've got a lot to cover today, with a mix of fun facts, cool trends, and in-depth analysis, all delivered in a clear and concise way.
Let's jump right into the US review. Here's the scoop. The economic data from this week paints a picture of a still robust labor market but stubborn underlying inflationary pressures. This supports our view that the Federal Reserve will likely remain patient when it comes to adjusting interest rates. In simpler terms, the job market is still adding new positions, but wage growth is slowing down. Although majority of jobs seems to be part-time jobs, though, this is good news for the Fed because they can say inflation might finally be under control. The Fed is waiting to see more data of this before they lower interest rates.
Now, let's head overseas for the international review. The Eurozone is showing signs of gradual recovery, with both economic growth and inflation starting to slow down. This paves the way for the European Central Bank to potentially cut interest rates soon. The Eurozone economy is picking up steam, and inflation is finally cooling off. This means the European Central Bank might lower interest rates to boost the economy even further.
We've got more exciting news in the Credit Market Insights section. Corporate bonds are indicating optimism about future economic growth. This is a positive sign for the overall health of the US economy. Companies are borrowing money easily, which means they're confident about the future. This is a good sign for the stock market and the overall economy.
And for our topic of the week, we have the dramatic story of the Japanese yen. It recently hit a 34-year low against the dollar, prompting intervention by the Japanese government to support their currency. The Japanese yen is getting weaker compared to the US dollar. This is a complex issue, but it basically means that Japanese goods are becoming cheaper for foreigners to buy. The Japanese government is trying to stop the yen from weakening further. Now we head over to Madi, to see what he has for us this week. Hi Madi, what's up?
Hi everyone, and welcome to this week's Markets Wrap. Today we'll be talking about what happened in the markets this past week and what I see happening next week. We'll cover important economic data, earnings reports, and anything else that might move the markets. Let's jump right in. This week, the stock market continued the trend of modest gains. The S&P 500 experienced some volatility, meaning its price went up and down a bit, but overall it closed the week higher. Some bumps along the way, but a slightly optimistic outlook. There were a few key events that drove the market this week. First, Apple reported a better than expected earnings, especially for sales in China. They also announced a huge stock buyback, which means they're using their money to buy back their own shares, which can be a sign of confidence in the company's future. This boosted investor sentiment, meaning investors felt more optimistic about the market. Second, the jobs report showed the economy might be adding jobs a little slower than before, but wages also weren't growing as fast. This eased concerns about inflation, which can be good for stocks. Finally, the Federal Reserve held a meeting and hinted that they might not raise interest rates as much as some people thought. This is because raising rates can slow down the economy. Not to mention we are in an election year and the Fed might be taking a wait-and-see approach. Looking ahead to next week, I'm cautiously optimistic. There aren't many big economic reports coming out, which reduces the risk of something unexpected happening that could spook the market. While the economic calendar is light next week, there are still a few things to keep an eye on, like data on consumer credit, oil inventories, and consumer confidence. Next week promises to be a busy one for earnings reports, with companies from a variety of industries releasing their financial results. This can be a significant factor in how the market performs, so be sure to stay tuned for updates on these and other potentially market-moving announcements. Thank you for joining me for this week's Markets Wrap.
That's all we have for today's show. We hope you enjoyed our informative and entertaining financial update. Until next week.
Thanks for watching. Please don't forget to subscribe and hit the like button.